Hello, everyone. Thank you so much for joining us today in SDI's webinar. I am going to give us just a couple minutes while we wait for the rest of our attendees to jump on, and then we'll dive right in. All right, I'm going to get us started. We've got a lot to cover today, so we will jump right into it while everyone gets onto our call. So again, thank you everyone who's joined us today. My name is Elisa Alvick. I will be your moderator today. This is our webinar, Forecasting Through Uncertainty, How Current Events Are Reshaping the Instrumentation Market. Before we turn it over to our experts today, I wanted to cover just a few housekeeping items. First, if you experience any issues throughout the broadcast, please feel free to put them in the chat. I'll work with you directly to fix them. Second, this presentation will be available on demand after the webinar is concluded. We'll send you an email with all the information on how to access the recording and the slides. Third, we will be taking time at the end to answer questions. Please feel free to submit your questions in the Q&A section at the bottom of your screen at any time throughout the presentation. We'll get to as many of those as we can at the end. And of course, if we do not get to your question, we'll follow up with you after the event. All right, without further ado, I'm excited to hand it over to today's host. We got Mike Tice, SVP Syndicated Research, and then our two market analysts, Wes Bova and Amethyst Holder. Mike, that's it for me today. Go ahead and kick us off.
Great. Thanks, Lisa. So maybe some quick introductions. I'm Mike Tice, SVP here at Science and Medicine Group, and I head up some of the insights brands, including SDI, that publishes the Global Assessment Report on an annual basis and is part of the talk today. I began with the SDI brand 23 years ago, so I have a long experience with the life science and analytical instrumentation industry. Wes, you want to say hello?
Yeah, hi everyone. I'm Wes Bova, market analyst here at SDI. My background did biomedical engineering research for several years and primarily focused on some of the mass spectrometry, microscopy units. So great to see you all today.
Amethyst?
Hi everyone, I'm Amethyst Holder. I'm a market analyst at SDI. My background is in research, business, and biotech. And I've also had some research experience, particularly in the toxicology area.
Great, thanks. So just our agenda here, a quick introduction to Science and Medicine Group, who we are, what we do. Then we'll explore various aspects of current events and how they're affecting our market and how SDI has been thinking about them in developing our market estimates and forecasts. Amethyst will look at recent and prospective M&A activity that's also changing the marketplace from a competitive standpoint. And Wes will outline some of the high-level results and forecasts from the new Global Assessment Report. Here's just sort of an outline of SMG and our several different businesses. Sort of moving from right to left, we have digital communities and media properties that face scientific and medical audiences. That also gives us some access to qualified experts in these fields, some of whom have agreed to work as part of our research panel. Surveys and interviews with our panels inform some of our market research publications and reports, as well as our custom market research engagements, where we can tailor the audience to your needs. These publications and custom market research projects form the heart of the SMG Insights brands that you see here. So Bioinformatics hosts our science advisory board, a panel of qualified scientists that volunteered to help us in primary market research efforts. SDI obviously is focused on the laboratory, life science, and analytical instrumentation and equipment markets with our flagship global assessment report. SDI also is the publisher of IBO, our twice monthly newsletter on the same laboratory product markets, published continuously now for more than 30 years. Colorama provides market information on the IVD and related healthcare markets, and IMV provides primary research and databases related to medical imaging and clinical laboratories. Okay, now to take a look at current events and how to think about them, especially in this time of rapid change and uncertainty. Clearly, much of the uncertainty in our market stems from actions this year by the new US administration. I apologize if what follows sounds somewhat US-centric, but it does have an outsized effect on the overall situation. And much of the rest of the world is, behaving as expected. So it's not causing shifts in the marketplace or forecasting. So before we get into the changes, it's useful to think about how the market was trending as we came into 2025. The data here on the right show the revenue trajectory of our IBO sales index of public companies in the laboratory space. The light blue bars across 2023 showed sequential worsening from positive growth to negative growth. And then the dark blue bars of 2024 show the opposite with sequential improvement. Much of that dip is attributable to particular weakness in the life science sector for biopharma funding, as well as uncharacteristic declines in China due to poor external investment and some structural problems in the Chinese economy. But given that rise through 2024, 2025 was starting off looking positive. This, of course, was tempered by the US elections at the end of 2024 and the many announced future actions of the incoming Trump administration, including the likelihood of widespread tariffs. So as of the first of the year, our projections were no longer as rosy as they might have been for 2025 at least. Likewise, many public companies that issued guidance for the year were conservative in their growth forecasts. By the time our global assessment report was published in May, we were able to take into account the actual events of the early Trump administration and better adjust to the changes that were instituted or at least announced. So let's take a look at that. But first, maybe a short interlude that may be helpful. Tariffs. One of the questions on many lips has just been, why? Why impose tariffs? So I think looking at the sort of an analogy with the prisoner's dilemma scenario offers some interesting perspective. The prisoner's dilemma is commonly discussed in the context of game theory. So it's the object lesson in how self-interest can lead to suboptimal outcomes. So in the setup, imagine two burglars have been arrested and kept separated and questioned by authorities. If they cooperate with each other and stay silent, maybe they get convicted of a lesser charge, so both come out relatively well. But if one decides to defect and testify against his or her colleague in exchange for beneficial treatment, then the defector gets off scot-free and the cooperator gets sent to a long prison term. Now, if our prisoners are rational, the rewards and losses push them both to defect. No one wants to be the sucker who has to go alone to prison while your partner is free. But if they both defect and confess, both go to prison. So now in a real game of prisoner's dilemma, you might have to wait 10 years until you're both out to play the game again. But when we make the analogy to world trade, where countries and companies are transacting many times a day, the situation turns into an iterated prisoner's dilemma where you keep playing over and over. In that situation, continued cooperation is a stable game strategy. And up until recently, that's where most economists and countries thought we were. Sure, there were some tariffs in place for key industries, but by and large, tariffs are historically low, and everyone's the better for it. So that's sort of situation A in the table, where both more or less win. Now, the Trump administration thought the world was actually in situation B, where the US was cooperating, but the entire world was defecting. And what fed into that was not by looking at the size of the tariffs, which are generally small, but by looking at trade deficits as the victory condition, if you will, in this game. So following the logic of the prisoner's dilemma, if you think you're in case B and you're the loser, then your move is to defect and go to case C. in this case by imposing tariffs on the rest of the world. And this hypothesis, for the reasoning behind it, it's supported obviously by President Trump's public statements about trade deficits, and also the mathematical formula used to determine tariff sizes, which included the trade deficit with a particular country as a factor. Now, that having happened, seeing the US defect, the rest of the world now sees, now we're in case B, where we're cooperating and the United States has defected. And again, following the logic, then they defect and they impose reciprocal tariffs. So this is, I think, why we find ourselves where we are, with at least the announcement of tariffs by the US and the mirror image responses of its trading partners. Okay, so what does that mean then? So like many other experts, SDI took the position that the tariffs are largely a bargaining chip, a way to get other countries to the table to negotiate. And so we've obviously seen many of the tariff deadlines extended or the numbers actually reduced, all in the name of negotiation. So the overall effect baked into SDI's estimates of the instrumentation market are that US tariffs and the response to them will cause some friction in international trade that slows growth, and that US and China will suffer the most from it, but that the effects will not be as severe as the announced numbers would suggest. And so far, this is borne out pretty well. Anyway, under this assumption, what should instrument manufacturers do? Really, it's so situation dependent. It's impossible to give one size fits all advice. Are you manufacturing in the US to sell to China, or in China to sell to the US, or only to domestic Chinese customers? Do you source components from China or the US? The pandemic ushered in some sourcing issues that have led many of you to have more robust or flexible sourcing options, and that may stand you in good stead here. And with the US being maybe an unreliable trade partner, is it better to focus on other geographic segments? The cost-benefit analysis is really complex. So, what can you do? In a word or two words, market research. One thing to consider is that decide whether to switch manufacturing locations or find a different source of components for plastics or electronics. So are your customers. What are they doing? You need to know that in order to better choose what you should do. If you, pull all your manufacturing back into the US and they move theirs offshore or vice versa, you're mismatched with your customers. So getting customer input is vital right now. And this is something that we at SMG can certainly help with. We have access to thousands of lab directors and executives, and we can target a study to look at your customers to see how they're adjusting to market conditions. Using SMG also helps to add additional reach and an unbiased, independent look at the market. We have contacts with people who aren't your customers, but who have the same profile as your customers. You can tap into the entire addressable market. We're also experimenting with new ways to get results on an accelerated basis. Okay, so obviously tariffs isn't the full situation. There are other effects. The Trump administration has been making many controversial changes, and some of them also have significant effects on the marketplace. Grant funding. Applications for grants and even approved grants have been held up and the funding delayed or stopped. Significant future cuts are proposed for NIH and other agencies that many research laboratories depend upon. SDI's scenario called for significant disruption to the research community in academic, government, and some private sector labs due to funding changes, but that the underlying authority for such funding was guaranteed by Congress and that the money would ultimately flow. I mean, this view still has validity. Just yesterday, a federal court declared that cuts to hundreds of DEI-related NIH grants were void and illegal. But however, that and many other lawsuits are still moving through the court system and the inevitable appeals. And the wheels of justice turn slowly, so the disruption now seems to be clearly more extended than we had originally anticipated. Perhaps even more corrosive in this environment is that this disruption has caused some labs to lay people off, release staff. And this and other actions of the administration have led to a brain drain in the research labs of America, researchers leaving or choosing not to come to the United States. Likewise, shuttering entire government agencies and programs, laying off staff, rolling back regulations are leading to an overall lessened laboratory demand. Again, This effect on government labs and regulatory burdens was anticipated in our market outlook, as the administration clearly laid out its preference to reduce regulation on industry. But really, the surprising nature of the cuts and layoffs has been more extreme than anticipated. Again, the courts have intervened in many cases, but in the interim, many government scientists have either lost their jobs or they're in limbo, so they are not at work and they are not ordering and using lab products. And again, given that twilight position, many career scientists are looking to leave public service, a further source of brain drain from America's laboratories. In addition to the direct effects, there's some indirect effects worthy of note. International trade is not a two-player game, like the prisoner's dilemma. When the US unilaterally imposes tariffs on other countries, the other countries are free to trade amongst themselves, and they are. It'll be interesting to see if this trade continues, with countries determining that the US is unreliable. Does that incentivize them to make more friendly trade relations with everybody else? This will cause, some shifts in the flow of trade potentially. And while reciprocal tariffs are the obvious countermove to US tariffs, the Chinese, I think, have shown that, they're playing 4D chess here. The licensing requirements on rare earths exports gives them a lot of control. While recent negotiations with the US have assured some exports are forthcoming, and the Chinese have their fingers on the throttle. They can approve or refuse future exports to the US at will. The importance of rare earth elements to high technology products cannot be overemphasized, and China dominates current worldwide production, and it will for the time being. If the Chinese ever have to make good on this threat, the consequences could be catastrophic for US industry. Okay, it's not all doom and gloom. One last touch of game theory is that the game of brains is a zero-sum game. So America is suffering from a lack of brains, and those brains have to go somewhere else and create a surplus. And there are already programs in place in the EU and China to try to take advantage of this, offering incentives to new international researchers. And this is not just about labs. The brain drain also affects the entrepreneurial class. So looking long-term, this could result in a greater share of innovation and commercialization of things that come out of labs taking place outside the US. And a certain amount of laboratory demand will follow that. And along those lines, projected staff cuts at FDA have also put some pressure on pharma to move clinical trials outside the US to avoid the possibility that approvals will take longer if there's a smaller FDA workforce. What to watch for in the future, Congress really. I've referred several times to the lawsuits and court actions that have stopped or paused certain actions as being illegal, but the US Congress has the power to change the law. And in addition to the laws, Congress holds the sole power of the purse. So ultimately, it'll be a question of whether Congress passes laws and how it implements the budget. The conventional wisdom usually is that Congress receives the presidential budget requests with, solemnity and then ignores it and does what it wants. But in the current environment, Congress seems more likely to accede to the president's wishes. And despite his party's slim majority in the House, the House was able to pass a budget. Currently, the matter lies with the Senate, which is an independent body with its own priorities. Assuming the Senate also succeeds, then the two have to reconcile their budgets to get a final document. So that's really what's going to set the course for grants, programs, agencies, etc. Obviously of critical importance to keep an eye on. Likewise, other things may also be up for Congress to decide. Although the administration has been blocked from limiting overhead in grants to 15%, that is, I presume, the sort of thing that Congress could change with a stroke of a pen. This would create havoc with many institutions that rely on that funding. Given the current environment where the federal government is looking to shrink its involvement and pass expenses on to the states and private institutions, it's certainly very possible that Congress could make that action and reduce the overhead allowed in research grants. As for tariffs, Congress has the legal authority to impose them. Will it back up the president or not? There's been talk about pharmaceuticals, which are currently exempt, being subject to tariffs. Again, that would be a game changer. So, the US has been the source of the most extreme and fast-moving developments, but other regions also pose opportunities and threats. Will there be a resolution or a continuation of the Russian invasion of Ukraine? Will that, lead to Europe devoting more or less resources to defense over other priorities like science and medicine? And, the exchange of drones and missiles from Israel to Iran and back again is continued. And the Middle East poses a threat that was, hypothetical barely a week ago. And this morning's news is about, whether the U.S. will become involved directly and militarily in that. Okay, having ended on a properly ominous note, let's start to take a look at the contents of the report and what we've seen in the marketplace, past and future, in terms of M&A activity and the overall market size and growth forecast for laboratory instrumentation. So here I'll turn it over to Amethyst.
Thanks, Mike. So yeah, now we'll turn to sort of M&A and divestitures and some of the trends we see in the global assessment report and beyond. Next slide, please. So on your right in the two circles, you'll see the M&A activity that was cataloged in global in 2023 and 2024. That also includes divestitures. There were nearly 200 recent acquisitions and divestitures across the 10 key analytical instrumentation categories that we cover in global, and they spanned from every product type, including software and consumables and instrumentation and service as well. So you'll see in the box there below that some of the areas in which the majority of the acquisitions and divestitures took place in. Notably, life science was the largest category for M&A in 2023 and 2024. In the context of the market forces like inflation and deflationary pressures and policy changes, tariffs, and some of the things that we've sort of seen bearing themselves out in the market, mergers and acquisitions remain a pretty common business strategy right now to either incorporate inorganic growth into business units through strategies of diversification, or in many cases to increase, to streamline divestments. So streamlining divestments, what do I mean by that? I mean that we can reduce the size of our business and business units' exposure to some of these potential risks and market trends by spinning out a business and shoring up our capital. So the current story in the M&A space is really one that has been established by consolidation over the past few years, and the overarching M&A trends still really favor consolidation in technology areas that are growing, like specialized techniques in surface science or in analytical chemistry, molecular spectroscopy, and transcriptomics and protein research. So this is especially true of technologies where there is in the life science area or other areas across the market where there is a need to acquire the IP, the intellectual property, instead of generating it to avoid patent issues. Next slide, please. Okay. So we're jumping into some of the examples of M&A divestments in global, and you see acquisitions on the right, left side, and divestments on the right. We've cataloged some major market transitions in the lab equipment space, for example, Sartorius and the Polyplus transfection, taking that acquisition, which pulled in a major transfection vendor into Sartorius's overarching brand. The arrows you can see show which direction the business units are moving. So yeah, there's a lot of action in this space it's really relevant towards and documented in global. So turning to the divestment side of things, there's also some major changes in market dynamics there as well, where divestments are becoming increasingly common. So recently, in the past, again, 2 years here, from 2023 to now the present, analytical instrumentation vendors have shown preference towards reducing their budgets. And sort of reassessing the cost of future acquisitions by cutting costs in their current business units. This also shows up as reducing overhead and streamlining operations to promote future growth and be prepared for the next set of acquisitions, which may come down the line. While the divestment landscape has been more broadly based in life science and spectroscopy and some of the applied and environmental end markets, we also note that two of the divestments I wanted to point out here are PerkinElmer divesting its life science business in the first quarter of 2023. The life science business included clinical, diagnostic, and some automation, and that ultimately became Revvity. Similarly, Danaher divested its environmental and applied science business also in 2023 at the end of the year, and that ultimately became the private and separate company Revvity, Veralto. So in both the cases of Veralto and Revvity, they were born out of a company deciding that to streamline their business units, and now they operate completely independently. Looking forward into 2025 and 2026, there have been a number of announcements, including of divestments, that is, including Thermo Fisher's announcement to spin out parts of its specialty diagnostic business, including some microbiology business in that space, and BD, a major player in the life science market, may be spinning out its biosciences business unit altogether. Many of these trends are sort of covered for the top 50 vendors for a selected top 50 vendors in the company's report, which has been recently published as well. Next slide, please. So when you take a look at the current M&A activity, which I just mentioned, and beyond, let's focus in on some of the trends that are affecting this space across analytical technologies. The overall trend here is a freeing up of capital in a otherwise capital constrained environment, where it's really key for businesses to sort of look at the potential for strategic investment and the cost benefit of each merger and each potential divestment. In that space, in 2025, acquisition trends have sort of flattened or balanced themselves out. Private equity in particular has sort of reduced with a few peaks, namely in Q4 of 2024, and a sort of cautious approach towards new acquisition. Another trend in the acquisition side of things is patent protection and regulations. So this also applies to the investment side of things, where new market entrants may not be able to get over the patent hurdle without just acquiring a given business. One example of this is in Illumina, which had to tried to acquire Grail, but then faced some regulatory hurdles in that. So with any of the acquisitions and divestitures, there is a final check, even if it makes sense for the business. I expect to see that will continue in 2025 and beyond. And lastly, there's a significant amount of investment in acquiring emerging technologies, and we expect that to continue as well. And that's documented in the more specifically in the Global Assessment Report. So what's the bottom line on the acquisition side of things? The outlook is generally positive, but will definitely vary by technology area, and some of those market conditions may factor into whether or not the acquisitions to occur, or business may have to take a more defensive strategy to maintain free capital in a, again, capital constrained environment. On the divestment side of things, I've mentioned already the preparation for future M&A activity and the streamlining of business units. So effectively in 2025, divestments have peaked up, particularly in the first 2 quarters here. And that trend I expect to continue through the remainder of 2025, especially given the level of uncertainty and the potential for a lack of regulatory approval of divestments that could also be a hurdle. The bottom line on the divestment side of things is really focused on the broader business environment and how the cost of integrating or maintaining some of the M&A activity of the past few years seems to be on the rise. So those costs of integration and maintaining the business units could encourage, let's say, certain technology areas and certain business activity to lean towards divestment. And with that, we'll turn it over to Wes to get deeper into the market in global.
Thanks, Amethyst. So I'll be doing a market overview. We'll be looking at the overall market size and the growth by technology, end markets, regions, and then finally, we'll take a look at the market leaders. So Mike, if you could start us off in the next slide. So the overall market for 2024 sits at around $83 billion globally. Year over year growth was small when comparing to the prior year, 2023, with growth approaching just about 1%. So looking at some of the biggest themes this year was market retooling and the changing global dynamics due to investment in global funding priority changes. So one of the primary reasons for a lack of growth was slower funding in the academic sector due to the sunsetting of many COVID-era funding sources, such as federal or government subsidies, and the slower private investment that followed, and a large decrease in demand from China, a historically high growth market, which due to a variety of circumstances such as changing macroeconomic factors, such as a slower COVID recovery compared to other regions, which resulted in a weaker lending environment, really cut down their analytical tool purchases. So for future market growth is expected to be more positive, as we are already seeing signs for growth returning to the pharma and CROs, which are a major source of analytical instrument market demand, and continued strength in the environmental and semiconductor-related end markets. So next slide, please. So let's take a look at some of the technologies that we cover. So how do these different technologies perform in 2024 and what future are we seeing? So let's take a look at the life science instrumentation. You can see the percentage over on the chart on the right. Life science instrumentation includes technologies such as PCR, sequencing, flow cytometry, and electrophoresis. And this is probably the largest group of technologies that we cover for SDI in the global. This market saw slowdowns in growth in 2024 due to the slowdowns in academic labs, which is a recurring theme you're going to see in this webinar, which had constricted budgets following a period of more plentiful capital, and a sagging biotech market, which deals with a lot of smaller and up-and-coming technologies and small and medium-sized companies that relied on a great deal of initial capital to fund, but due to a variety of circumstances, have lost that funding. But one of the other interesting things I wanted to talk about was how overall growth trends seen in this slide don't always tell the whole story about how a technology is performing in the market. So if you take a look at mass spectrometry on the left, for example, there was the highest growth shift, seeing overall growth declines in a normally high growth market due to several end markets seeing constrained budget spending, such as biotech, pharma, and academic labs. And that's particularly affected the life science portion of the technologies we cover in mass spectrometry. And despite this, there was still no shortage of demand for mass spectrometry and PFAS. If you don't know, mass spectrometry is the best instrument for quantifying PFAS contamination and some other contaminants. And growth in this application area has been skyrocketing, especially for the high throughput technologies such as quadrupoles. This sort of breakdown is important when understanding the health of a technology. As we can see in this slide, mass spectrometry still has a healthy outlook going forward. A similar situation, albeit for different reasons, is occurring in sample prep. Poor year, but decent outlook going forward. And I just wanted to point out one other key technology area is the lab automation and software. Lab automation and software is one of the fastest growing technology areas, and particularly on the software side of things. With the expansion of AI into different software packages and the increasing importance of large data set analysis, labs are relying more and more on software packages with the aim to improve their productivity. And as a note, SDI will be coming out with a report later in this year looking at the software landscape and what's going on with there and how things are being affected. So next slide, please, Mike. So this is going back to the sector growth a little bit more and kind of digging into that. As you can see, pharma bio spending declined by 3.1% last year, and public sector spending declined by 2.5%. The public sector being academic labs and government government-run research labs. Conversely, both applied and industrial were strong. The applied spending grew on the strength of PFAS testing and other contaminant testing, such as microplastics, in food and agricultural labs and environmental testing labs. Clinical testing has also been very strong, although I do want to note, when we talk about clinical testing at SDI, we are not considering diagnostically marked instruments in our estimates and projections. So in clinical research, increased uses of personalized medicine, precision medicine, and new therapeutic modalities are requiring clinical laboratories to increase their throughput, while also exploring new methods for disease testing, hence the increase in demand for testing equipment. And in the industrial sector, we're seeing very good growth for battery testing, with many regions putting public funding into the infrastructure and research of battery technologies, and as well as semiconductors, which are sort of a constant area of high investment, and once again, an area where AI is driving demand. Next slide, please. So let's look at the regional demand. If you look on the right, we can kind of see an overview of the regional state for the analytical instrument market. As you can see, the number one driver of demand decline largely comes from China, and this is again for the last year, and to a lesser extent, Japan. So for China, the region never really fully recovered post-pandemic compared to other regions. This was due to a combination of several macroeconomic factors. The first being the real estate bubble collapse affected the lending environment of the region, making it more difficult to purchase, especially high cost instruments. Second was the private sector spending decline, and we saw this particularly in the international private spending within the region. This was basically wary investors who sought to diversify their investments to other regions such as India and Asia Pacific, partly because of the lockdowns affected, production in that area, and largely, again, to diversify into other potential high growth sectors. And you can see on the forecasting here on the right, there's some high growth for India and the other Asia Pacific. Japan's decline is largely due to inflation and a lack of economic growth for the region. And Japan's inflation kept on rising while other regions kind of contracted their inflation, or at least kept it under wraps. North America's spending fell as a result of the sunsetting of many COVID era stimulus, and more importantly, the retooling of many sectors' research priorities now that we are getting away from the COVID era. Growth going forward, though, is positive for many of these regions. The market is very cyclical, especially when comparing to prior years that were very slow. As Mike showed you earlier, you can see a subsequent rebound in growth as the year progresses. And then the final slide, Mike, or second to final. So let's take a look at the market leaders in 2024. As Amethyst already mentioned, there's a lot of M&A market activity, and you can see some of the effects in this slide. Bruker is now the number 6 company in the analytical instrument market, surpassing Illumina, which is more of a narrowly focused company that specializes in sequencing, since sequencing didn't do as well last year. While Bruker's broad-based market kind of helped offset any of its slower growth areas, it was able to surpass Illumina. If you look at Mettler-Toledo, they passed BD Bioscience, and an otherwise very similar market, coverage. Mettler-Toledo has been focusing on more lab software and lab informatics, which has increased their standing. Thermo Fisher also gained on its market share lead, and key instrument areas like electron microscopy helped bolster this and helped offset some of the otherwise weaker sectors of their company. So, final slide. So that sort of covers the global, the overall view of the global assessment report. So the global does have over 1,100 pages of data that cover a broad spectrum of technology areas, cover over 1,250 vendors, over 700 charts and graphics, over 500 data tables. Each one of those data tables has market estimates by year, and forecast projections. And we even segment those by product types, by regional segmentations, which you've already seen in the previous slides, and by the major end market sectors. And we cover 84 individual product categories. And we at SDI try to keep up with the latest trends in the technologies. So we're constantly retooling and adding and adjusting. And you can see on the bottom there, the major technology categories that we kind of group everything into. And then we follow that up with the various technique breakdowns. And with that, I think we're all set for the Q&A, Lisa.
Awesome. Thank you guys so much. Thanks for everyone who's stuck through it. I know we're running a little over. Again, we'll send you the recording and the slides if you can't stay a little longer for the Q&A. It does look like we received some questions. For anyone else, feel free to enter your questions in the Q&A while we go through some of the ones that came in. Okay, so it looks like with lower regulation, would there be increase in market demand in pharma who can now sell loosely tested pharmaceuticals and bring more products to market faster, boosting bottom line?
Okay, I'm not sure I would want to call it loosely tested pharmaceuticals, but yeah, certainly I think a lowered regulatory burden, industry likes that. And then really it's going to depend on, what kind of products you're supplying to the pharmaceutical industry. Loosely tested is that, for clinical testing that requires analytical instrumentation to do that. So if there's less of a burden or they do, fewer rounds of phase 1, phase 2, phase 3, that could reduce demand. At the same time, if you're more involved in production and QA, QC, if pharmaceutical companies have more products, then they're doing more of that kind of analytical testing. So yeah, it probably depends on whether you're on the research side or the production QA, QC side.
Awesome. All right. We'll jump into the next one. It says, with some of those changes to the marketplace being different from your expectations when you published, will there be any updates to your forecasts?
I'll jump on that one too. Yeah, obviously, like I indicated, there's some things where the changes were more severe than we originally expected when we published. We have in the past, sometimes when things happen, when there's a global financial crisis or something, we will issue updated forecasts. At this point, I don't see a need for that, but obviously we'll see how the year progresses. One thing I will note is that something we've added 5 or 6 years ago was we now have what we call the global quarterly data stream. So there it's more retrospective. So we're just about to publish, I think, our Q1 of 2025 quarterly data stream. So that'll show more about the how the year progresses as we see it going. So that would be something to look into if you have access to that or to get access to that. So obviously it's something that comes out 4 times a year, and and through that we'll adjust our forward-looking estimates for 2025 and the 5-year forecast as well. So that's sort of our most current look at the market.
Perfect. All right, we've got an M&A question. Do you think M&A activity will continue at its current pace, or will economic and regulatory uncertainty slow things down in the second half of 2025?
Yeah, I can tackle that one. Thanks for the question. So M&A activity is very dependent on the overall health of the business. So I guess I would say, in short, it kind of depends. I think we can expect there to be a little bit of caution in terms of taking on new business units, but I do expect divestments to continue to be a strategy to free up capital for future M&A.
Awesome. All right, we'll take one more. It says, can you explain the rationale for the forecasted growth of the public market in 2024 through 2029?
I'll take a crack at that. So one of the things we're seeing is that in China, for example, they had a pretty bad year last year, but they had this really large government stimulus program that'll help have a rebound in that region. And while the US market, academic market, is more grim, other regions are actually have a pretty healthy academic spending. So we are going to see a slowdown in what we would normally have forecasted, but that doesn't mean that globally the public market's completely dead in the water. And then as things sort of progress, we still expect, we'll see some shifts in the market, but globally there's still plenty of good public market demand.
Awesome.
Yeah, I would just add to what Wes had to say that the forecast he was showing before was for 5 years out, so the CAGR for that. So 2025, may be considerably worse than that this year, but looking for the average over 5 years, that's where we see it.
Awesome. All right, guys, that was great. Again, if we did not get to your question, we'll make sure to follow up with you after the webinar. We'll send you a link to the recording and the slides. Again, thank you everyone who joined us, analysts, Mike, everyone, thank you for that presentation, and hope everyone has a great rest of the day. Thanks, guys.